The subreddit WallStreetBets is generally thought of as a bunch of degenerates who have no idea what they're doing, but they do have some pretty insane success stories. Grab a drink, take a seat, let's talk. What's up, y'all? It's Brian. I realized the other day that Reddit WallStreetBets has over 17 million members. WallStreetBets is a page on Reddit where people go to discuss investing, whether that's looking at investing memes, looking at news, or discussing research. They go to talk about investing. Since so many people actually rely on this page, I wanted to know, does this page have any credibility? Should I be taking any of the advice that I see on WallStreetBets? And this first story, in my mind, is what put WallStreetBets on the map. This is the so-called infinite money glitch. I didn't put too much stock into this at first because it sounds like a cheat code that you would find on a video game until it blew up. In 2019, a few members of the WallStreetBets community found a mechanic in Robinhood that allowed them to get a loan for infinite amount of money. Say I wanted to buy a house. I would go to the bank and I would give the bank a $10,000 loan for a $100,000 house. So now I've got my $100,000 house, but I only own $10,000 worth of it. But I take this $100,000 house to an apartment complex and I say, hey, I want to buy this apartment complex worth $1 million. And as a down payment, I'm giving you this $100,000 house. So the apartment complex says, great, yeah, sure. Now I take my $1 million apartment complex and I go to a hotel worth $10 million. And I say, hey, I want to buy this $10 million hotel. Here's a $1 million apartment complex as a down payment. So obviously in real life, this would never work because I only owned $10,000 worth of that first house. But in Robinhood, there was a glitch where if you sold a call option, I could have a loan from Robinhood to sell a call option and get a premium for that loaned call option. And then that premium would go into my cash. And then Robinhood would allow people to get more loans based on those premiums that they got from already loaned call options pretty much. So by doing this repeatedly, you could scale your money essentially forever, as long as you had more time and big enough balls to potentially go into millions of dollars in debt. The Redditor who took this glitch the furthest had the username Call Warrior, which is very fitting because he was selling call options. Here is his original post titled, Robinhood has inbred and made the ultimate autist, $3K to $1.7 million. He said, after realizing I only had a few $1,000s to gamble, which is exactly what he's doing, I decided why not try this new glitch. After seeing people on the almighty WallStreetBets wager a timid 50K or so, it was a clear choice to raise the average for the good of all. That's how I found myself going over $1.7 million in AMD shares, selling around $1.6 million worth of AMD calls. And here's his position right here. He's got 1.7 million. And at the time, he's currently up $67,000. So the way this goes poorly is if the AMD calls that he originally sold, if the price of AMD goes up, then whoever bought the calls from him would then execute the calls and he would be forced to pay out millions of dollars. We never saw a follow-up post showing like how much money he actually made in the end. But in his case, it looks like he actually pulled it off. Even though it appears to have worked out for Call Warrior, not everybody made it out unscathed. The Redditor who is most infamous for losing the most money on this strategy is Control the Narrative. He had $2,000. He pushed it up to $50,000 worth of leverage and lost it all. By the end, he was owing $50,000 to Robinhood. I'm not sure if he ever paid it or if Robinhood let him off the hook, but it was pretty scary to see. The infinite money glitch was the spark that helped WallStreetBets to catch on. People wanted to see unconventional investing methods, but it was really the next saga that caused WallStreetBets to blow up. And this time it wasn't just a single rogue trader. It was thousands or maybe even hundreds of thousands of Redditors who banded together to move the stock market in a way that nobody thought was possible. In 2018, hedge funds were doing massive short positions on GameStop. GameStop is a video game retailer that appeared to be going bankrupt. If I were going to short GameStop, the way that would work is I would borrow shares of GameStop from somebody, and then I would immediately turn around and sell those shares on the open market. Now, eventually I have to return the shares. So what I'm hoping is that the price of GameStop goes down. That way, whenever I buy the shares back to return, I get to keep the difference in money. What the short seller does not want to happen is for the price of the stock to go up. Because if the price goes up and I have to return that share, that means I have to buy it back at a higher price than when I sold it initially, meaning I lose money. And a short seller can lose infinite amount of money, right? The stock can keep going up and up and up. Whereas if you are buying and selling stocks normally, at least you have a floor. You know, if the stock goes to zero, you can't lose any more. But for a short seller, it's even more risky because the price can go up and up and up and up. At the end of 2019 and early 2020, the share price was down to $4 per share at its all-time lows, and roughly 60% of GameStop's total shares were being sold short. 60% were being loaned out to other people who thought that GameStop was going to go bankrupt. But this caught the attention of Michael Burry. Michael Burry is the guy who was famous for The Big Short. He made about $100 million in 2008 off the financial crisis. So this guy knows what it looks like to short a company. So Michael Burry saw the insane short volume, and he also saw some hidden value in GameStop. He put out a letter to the board of directors of GameStop saying that GameStop's about to hit a console cycle, meaning there's going to be a new Xbox, Nintendo, and PlayStation. So it's about to be a good time for retailers. GameStop also has tons of cash on hand. They had about $480 million of cash on hand, even though their company was only worth about $280 million in the market. And they were able to do $238 million in share buybacks, which would reduce the number of outstanding shares. Deep fucking Value started building his position in June of 2019 when he first caught wind of Michael Burry's strategy with GameStop. And then as he continually posts updates on Reddit, he starts building more and more steam on Reddit. At first, people were giving him a hard time as GameStop looked like it might be going out of business. But by August of 2019, when Michael Burry put out another public letter to the board of directors and Deep fucking Value's portfolio is starting to go up, starts getting more and more steam on Reddit. At this time, Deep fucking Value is up about 100%. He's at about 100K in total value when he started at 53K. Later in 2020, Ryan Cohen, who's a founder of Chewy, bought about 10% of GameStop and later got a seat on the board of directors. At that time, Deep fucking Value's portfolio had risen about 20x and he was now at $1 million. At this time, Reddit is all over this story as more and more Redditors are actually piling in to GameStop and buying as many shares as they can. As more and more Redditors are piling in and buying shares and refusing to sell, everybody is saying, don't sell, hold, because the price is going up at this time. It was at its lowest 4. In September, it was about $8 a share. In October, it was getting up to $10, $12 a share. This time, the short sellers need to close their positions. They need to buy shares, but there's not enough shares to buy. And so everyone's rushing to buy shares. No one wants to sell. So the price goes up and up and up. This is what you call a short squeeze. At its very peak, the price of GameStop went up to about $500 per share, and Deep fucking Value made $50 million from his $50,000 holding. In January of 2021, Deep fucking Value posted a portfolio update with his peak portfolio value at $41.5 million, up from an initial investment of just $53,000. Reddit WallStreetBets was cemented as a power to be reckoned with in the stock market. And it didn't just stop with GameStop. Really, this marked the rise of meme stocks as a phenomenon in the stock market. Meme stocks are stocks that get incredibly popular based purely off of social media buzz, especially off sites like Reddit WallStreetBets. Instead of being driven up by the company's performance, people are buying these stocks purely because they see other people doing it, or it's because of some kind of online trend. It's a mixture of excitement, FOMO, and sometimes just pure humor. These stocks can shoot up in price incredibly fast, but they can also fall back down just as quickly if the excitement dies back down. So investing in meme stocks can be incredibly risky, and it can also be incredibly popular. But if I'm going to do it, I have to be incredibly cautious and know what I'm getting into. And I think the meme stock phenomenon is here to stay. In the beginning, GameStop was the spark and it was fueled by COVID-19 lockdowns and stimulus. But as long as the stock market continues on its historic bull run, that is the underlying condition that is giving investors extreme confidence and is being exacerbated by the fact investing is as beginner friendly as ever. Trading apps like Robinhood and Webull have $0 commissions, and the gamification of investing combined with the rise in popularity of investing-centered social media is going to continue to fuel the fire. The influence that WallStreetBets has over meme stocks makes it impossible to ignore. I do not plan to invest in every meme stock that's getting pumped up, but WallStreetBets does contribute to stocks being mispriced in a huge way, and that is what creates buying opportunities. The biggest and most powerful emotions are fear and greed in the stock market when it comes to moving prices, and WallStreetBets plays a critical role in this. Personally, I do not like to invest in meme stocks that have already been pushed up, even if it does seem like there's still momentum to the upside, just because I've seen so many reversals happen so fast and unexpectedly. But after a reversal, it does seem like stocks, they tend to get pushed lower than they should because investors are overly fearful of the downward momentum. In my mind, paying attention to WallStreetBets is a useful tool to find stocks that have been pushed too far, whether that's too high or too low. WallStreetBets isn't the only tool that's good for this job. I've also used Grok, the X.com AI, to find stocks that have dramatically shifted in public sentiment. If you're interested in that method, check out this video right here. Cheers.